Hey everybody, hey traders, happy Monday. It is 5 p.m. Eastern Time on the 19th. We just had another start to the week, which was a pretty impressive Monday. This is what we look like. We started out pretty quiet for the morning, 55.60 around the open. That's our centered price. We started a little bit of a pullback just to fill the gap from Friday's close. That was all the market needed, and we actually had a very directional day. Usually markets are not quite as directional on Monday. But percentage-wise, I mean, the S&P is up 0.96, the Q's up 1.31, the Dow at 0.58, the Russell at 1.22. Broad market up. Let's take a look at the heat map for the day. So FinViz right here. Let's go heat map on the day. And we can see that mostly green across the board. Some big comebacks again. NVIDIA popping up there, 130. Man, it's got to be sneaking up towards those all-time highs. Google, Tesla having a pretty good day with some standout gains to the bright green side. If we go into the charts, I just wanted to point out that we are within about 1% of the all-time highs, and this is an impressive comeback. So I'm sitting here right at these highs around 1% or 1.01 or just within a couple of decimals there. We're essentially 1% off the highs. Now, what I think is incredible is you look at when we topped out here in the S&P and we bottomed out. We had a 14 bar trading window, and within about 1% of that high, we are sitting here going after 10 bars recovery. So this is now 9 of 11. So if you count this one, just count with me. So we have a little pause, a little pullback, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles off this bottom, and one was a pullback, one was a pause. The rest was ripping your face off bullish. 9 out of 11 candles within 1%. It's incredible to see how aggressive the bulls have been when usually the higher volatility to the downside is the bears, expertise. Is this is their forte, right? Is we have this big vol event and the bears step in here and they dump the market in 3 days. But man, these bulls have been impressively ripping the market back up. So look, at this point, and some of the videos I've done over the last week or so, I mean, I was watching levels like everyone else. I mean, I was looking to see, does the market care about this level? Does the market care about this gap? Not really, right? Then we gap up here. Does the market care about this level where we had the sell off on August 1st? Not really. If I look at my price day to day, does the market care about any of this? Not really. So what am I doing? I'm just letting the profits roll in. That's all. I mean, I've got some vol trades that go both ways. Some of them are out to the end of August, some of them out to the end of September. I'm looking out a little bit further on some of my longer term positions. But today was a pretty good day overall. Took a short-term play. I'll show you the levels here. Let me float this down for just a moment, and I'll float this down for just a moment. This is the Qs. And so I had a nice little gamma trade this morning on my QQQ. Most of the day we open up right in here, right? This is opening bell around 475, 476. The nice thing on my software is I had a 480 call that was a gamma level that stood out, really, really nicely today. There was virtually nothing to the downside. So all I did was I didn't just do a 0 DTE. That's typically not what I do. But when I'm pretty confident we got a good directional play and this is going to be a nice little magnet for price, I'll go out a couple of days. And so I went out to Friday's expiration, which was 8/23. I bought a 480 call, and it cost me about $2.50. You can see it right in here. If I go QQQ right here, 292 debit, close out at 392 credit. That was a 0 DTE trade. The way that I closed it, I did pay, 292 for it, but grabbed the dollar out of that. I did the same thing on the SPY. Now I will say this: I closed out for a dollar credit right here when we were still quite a bit. This is 2:50 in the afternoon, so we're still an hour plus away from closing bell. I did not get that final 5 and 10 minute push the last 3:50 3:55 p.m. Eastern time right before closing bell, and that was really the gamma squeeze that I was looking for. Now we blasted through 480, which would have been really nice. If I show you what this trade is trading for here, if I just go ahead and so I took the trade there, close it out here. Let me go ahead and similar order this. I mean, so I did 392. It was trading for 468 by the close. That's pretty substantial on a out of the money long call to see an extra 70 to 80 cents worth of profit on a position. But whatever. I closed that out at 3 p.m. or prior to that. Didn't have to worry about it much of the day, and it was a nice win on the SPY, nice win on the Qs. Here is the SPY for the day. SPY with the exact same thing, and there's another 5-minute trade. I looked at a 560, and all day today, we had this little opening bell. We started to see that our call option sentiment was getting much more love to the upside. And once we saw this pullback and gap fill, there's a nice chance to buy this around 554 or just stay the course of 555. But I was watching this 560 all day. I didn't really see much to the downside outside of a 535 or not 535, a 5. Was it 535? No, that was last week. I did a strangle trade here. Let me find it. I did a long strangle on my account. 553. That's what it was. 553 to the downside. That was a fairly large gamma level that you can see here slowly disappeared throughout the day, which is what happens when we see different net sizes in institutional flow. Market was favoring the run to the 560, and so my long call at 560 paid out more than my long put. So I closed out the long put. I took the long call, took some profit, and my 560 was nearly hitting the strike level that I wanted. I did the out of the money 560 put for an 823 expiration. Didn't pay a lot for it and walked away with a decent little credit. So I paid. Let me go to not the Qs but the SPY here. So the SPY. Where was my debit today? SPY. There it is. So I paid $1.93, got out for $2.55, same day, 60 plus cents with a couple of contracts. Same thing on the Qs, added up really nicely on the day. And am I done? No. This is the other trade that I'm looking at right now. This is the trade I have running on the SPX. This is essentially like a double calendar spread. I have calls on one side, puts on the other side. And for my call side, I do have a profit peak. And we are obviously much closer to the call side paying out. I've got a little ramp up in profit. I took this trade for 1750. It's trading up to 1790. We are close to that first profit peak, which in reality, if we hit this level tomorrow, let's say we get to like 5620 or 5625 or past that, this is probably going to be trading for $18.50 to $19. I might just take the profit and be done with it, and put the trade on Monday, close the trade on Tuesday, grab a 15 to 20% take profit, move on, and it's capital well deployed. So I'll keep an eye on this one for tomorrow. If we get into this first little profit peak, that's great. If we go beyond that a little bit, that's fine. This one should be maxing out. I can take some profit on it. But it's a little complex to talk about this in some live sessions. But it's all calls over here and it's all puts over here, and I have about a 50-point dead zone. So if price is going to fall back into the middle, okay, fine. I'll give it the volatility for the rest of the week. But if we get into this profit trap on the right hand side with calls, great. That to me looks like 56.20 or 56.25 higher, and I'll look at trapping some profit in there. So let me get this out of the way. Let's talk some more shop here. Everything was, look, the global market was pretty darn good. Overnight, I was looking at, we had a little bit of craziness out of the Nikkei. Here's the Japanese yen, which was up for the morning and gave back a lot of that throughout the entire trading day. And so, I was not necessarily buying risk off trading with the Japanese yen because one, this was all by itself with no sign of the Swiss franc. So we didn't have a full-on risk-off day. It was all the yen, and in typical fashion, the yen just kind of beats to its own drum. So it's all yen. There's no Swiss franc. And then as the London session was getting into that U.S. overlap, you can see that the Aussie, New Zealand were doing quite well, and the Japanese yen was fading. So to me, this looked like a risk-on type day. We had good prints and gains out of China. Everything index-wise for the U.S. is up. Volatility index back down to some fresh lows. SVXY is up, SVIX is up. Dixie, this is the dollar index, making a big fat candle to the downside. This is a trader's opportunity here, and I hate the fact that it feels like we're selling it low. But if we looked at a sell trade with confirmation, I'll look at a sell trade right there on the dollar index, stop loss above, and see if this is going to continue to head lower. Maybe target this holiday low from December of 2023 into 2024. That's right around the 101 handle. Anything lower than that, I would love to see a move into this 100 zone on the dollar index if we are going to see a full-on summer breakout. The only issue that I have with this trade, and I talked about this morning in several live sessions, if we see this dollar index, it looks so easy. Like, oh my gosh, how did I not call that trade and call that top in June? Well, if you look at every individual currency pair, they're not moving the same way. The euro dollar is the only one that's actually had a low to a high rip, as the dollar index has had a high to a low. It's the only one that closely correlates. The Aussie dollar has been back and forth in a wedge. The pound dollar has been back and forth with ups and downs. The dollar CAD's been back and forth. The dollar Swiss has been back and forth. The dollar yen's been all over the place. The New Zealand dollar's been all over the place. So it's not like this is just the easy instrument to trade. That doesn't mean that we can't trade it. Doesn't mean that it doesn't look good. I'm just looking at now, if we have some sustained movements, I'm saying take your chances on the forex pairs. If you want to trade the dollar, take the currencies for what they are. Right? I would put the stop loss where I need it to be, where I think it should be, out of the way, and see if this dollar index continues to push lower as we get through maybe this end of August with a bit of a summer breakout. Now, you've been told, but you've also been warned. If I look at this chart here, which I have my wedge pattern on, okay, I would almost prefer, because we're sitting here at the lows, I would almost prefer to see some retracement or a little bit more follow through and then a pullback to then short with a tighter stop loss and then look to see if this is the real deal to the downside. Because if this is a fake out or a bear trap, we could poke this low, have a bullish candle that comes right back into this wedge and holds the bottom and then works its way back into the middle of the range. I hope that doesn't happen. It makes sense to me technically and fundamentally that we're getting a nice clean breakout. It's that time of the year where the markets that go sideways tend to break out. And if that is the case, I like the dollar index to the downside. What is the better looking trade? Each individual currency pair has a pretty decent setup. If you're just going after 1 or 2 days candles back for a stop loss, I think that's not a bad way to look at it. If we look at oil, I did have some profit last week on oil when price was up near these $76, $77 levels. My stop loss was below 72.50. That worked out pretty nicely. Crude oil, same thing. Now my crude oil is all the way down here towards 65. Gold up here to fresh highs from a Friday push into a Monday close as well. So I mean, gold at all-time highs. I also looked on gold with the higher time frames. We're not sitting on gold with overbought conditions as of yet. If I go to my subgraphs here, the daily time frame is not oversold, or I'm sorry, overbought in this case. My momentum oscillator is not necessarily disagreeing between price and momentum. We are going slightly higher in price. We do have a slightly lower high in momentum, but because we are not overbought yet, I do think there's more upside with these breakouts in gold. If we take a look at silver, same thing here. Nice little comeback on silver, which I'm long. If we go to the dollar index is also not oversold. So another reason that I think there's good opportunity to look at dollar crosses and take a fairly short-term structure trade where maybe 1 or 2 days back, put a stop loss where it needs to go. I don't think that's a bad spot on the dollar index. If we go into crypto, we're trading at 59 right now, pretty choppy. Still a range. I think this is still a range on Bitcoin. We are making lower highs, we're making higher lows. But the big breakout for me is we got to see price back above 73, 74,000 for the bulls to really, take this thing into another big trend. Otherwise, I would expect trading on Bitcoin to possibly be a little bit boring. It is interesting how, the markets have ripped back in a big way, and Bitcoin, had this flash at 50K, came up to 60. Everyone's getting all excited, but man, the stock market just keeps ripping, and Bitcoin has been sideways at 58. So I don't know if they correlate and all of a sudden we're at all-time highs and Bitcoin catches back up, or they switch and take turns. I'm not really sure, but I'll be watching this level. I think this is a big range from high to low, high to low, high to low, slightly lower highs, slightly lower lows. My Ethereum ETS MicroStrategy. So copper, I've got a copper trade that's in long. Here's the 6J, which is futures in the Japanese yen. It's kind of wild and crazy. The Nikkei actually had a red day, which again, like I said, interesting that you have the Nikkei down. Initially, the Japanese yen showing some strength, but faded all the way back for the day. I will be watching the Nikkei overnight to see, does Asia have a pretty good session? If so, is it green? Or even if we have a pullback in the Nikkei from this low to this high, even if we have a pullback here, if there's a disconnect between the Nikkei going down and the Japanese yen also getting weaker, then I still think this is a setup for the market to rip back up into, probably 39,000, maybe even set up for a full-on recovery like the U.S. market is doing right now. U.S. market within 1%. Could you imagine that the Nikkei, after a 27% fall over a 3-week period, is back up within 1% of the highs? That would be insane, right? So, I mean, I know it's a slightly quieter picture here, but that's what the U.S. market is doing. If you take a look at the Nasdaq, let's go to the QQQ. I mean, we had a 15% drop in the Nasdaq, and we're back up here. It's obviously not 1% off the highs, but we're not that far away. We're about 0.5% off the all-time highs on the Nasdaq. So again, pretty impressive recovery. We'll see what the rest of the week looks like, but we're just getting started, and it started off on a pretty good foot with a Monday breakout day. Now, typically the highs for the week are created on Thursdays and Fridays. So if this is just out of the gates, do we have a bit of a pause on Tuesday, Wednesday? The market still rip for a Thursday, Friday high? Remains to be seen, but that's what I'll be watching for. All right, what else do we have here? Like I said, everything was pretty bullish on the day so far. The DAX had a good session. The markets have been up in Germany since last week. The FTSE in the UK, same thing, not that far away from all-time highs. What I've also been fairly excited about is China. Here we are, off these lows are at 16.5 up to 17.7. I want to say we've got a decent 7 or 8% recovery in China. That's a 7.68% recovery. I am adding some additional exposure. FXI. I have some shares and I'm looking to roll this week. This is Brazil also up off these lows. I put some trades in right around $30 on EWZ. Apple back up to some highs. Amazon filling some gaps. Google trying to work its way back. Meta sitting here near all-time highs. Microsoft working its way back. Netflix creeping up towards all-time highs. Nvidia, mentioned this earlier with that big bright green spot. We're down 35% from high to low, and what a comeback, right? So stock number what? One in the world, two in the world, something like that. Now $3.2 trillion, added a bunch of market cap back, and we're only about 7.5% from all-time highs on Nvidia, with earnings coming out on August 28th. So before the month is over, we're gonna have another big volatility week with some earnings on Nvidia to see if semiconductors are in a good place. Tesla also, coming back off those August 5th lows. Bonds, we have, let's see here. TLT up a little bit. We have had a slightly steeper inversion. This would be the bull steepening. The 2-year at 4.07, the 10-year at 3.87. We're 20 points apart now. We're still inverted, as opposed to that blip where we had that nasty close on the 2nd of August, terrible open on the 5th of August. Bonds are all over the place, stock market down, and we saw that inverted yield curve like for 1/10 of 1% above, and now they've gone back and inverted. So if it stays longer, then sure, we can kick the inverted yield curve down the road, and we can still have it run for one of the longest ones on record. I don't know how well it ends, probably not very well at all, but if it just stays inverted for longer, then I guess it can't come out and be the same signal that we've seen a lot of times, which is once we get out of the inverted yield curve, the markets don't look like they have a lot of good gains going forward. So maybe we just keep this bull steepening happening for a while, and we stay inverted a little bit longer to get through whatever, maybe the election, maybe the end of the year, maybe the first Fed cut in September, which, by the way, all that remains to be the same. So rate cut in September, still very high probability is one cut, 25 basis points. November, still looking for one cut as well. And then December is the interesting spot where right now, somehow November to December, the higher probability in December is that the market is going to see a 50 basis points cut by December. I'm not jumping into this bandwagon yet. I just think it's interesting that we are likely seeing a probability of cut to wrap up the year, having 3 cuts at the end, and looking to see if this Fed can somehow navigate, the triumvirate, quadrilateral, whatever you want to call it, most complicated Simone Biles type tumbling exercise, soft landing, thread the needle. Congratulations to maybe the Fed in this regime. Something tells me that's too good to be true. I've traded these markets for a long time, and I feel like something tends to break when the Fed thinks that they get something right. And so I'm a little cautious. And I think for good reason when history says the Fed usually reacts on breaking things. So maybe everything is great. So we've learned our lessons from 2000, 2001, probably not with over leveraging. We've learned our lessons from 2008, probably not with some of the some of the delinquencies and things that are happening under the surface. But I do think that the stress tests are fairly solid nowadays. I do think banks are bigger and unlikely to fail. And what does fail, the Fed steps in. What does fail, we have bigger banks to buy the assets. Look at JP Morgan, Signature Valley Bank, and some of that stuff that happened in 2023. So, I think that we'll say toolkit wise, things have evolved a little bit. But like I said, I'm a little cautious on everything as perfect, right? I mean, I think this is an impressive comeback. I'm just less mad about the fact that we're just going higher, and I'm just rolling with the current flows. So could I see the markets, coming up to some fresh highs? Yes. Could I see the markets poking those highs and then having a big correction and having a broadening pattern like this, and it drives traders crazy because there's so much volatility? Yes. Essentially, I would say this: be prepared for anything. So what I'm trading for is I'm trading for both sides. I think right now it's easy to be a bull. It's been easy the last 2 weeks to be a bull. Doesn't mean that it's here to stay. I'm just throwing a little bit of caution out there where as long as I keep my risk defined, keep grinding for income, keep protecting profits, all will be well. But I'm not making any big, bold, crazy claims out there. I did actually put in a short today at 600. It was actually an ES trade, so I put in at 60.10, which is way up here. I'll show you the trade. So here is, let me go /ES. And I put in a trade for $2.15 credit. I sold the 60.10 September 30th call, which is out 42 days, and I bought a hedge against that at 6,200. So in the event that I am wrong, and this gets up to 6,000 plus on the ES, which is almost 9% higher, by the way. So in the next 40 days of calendar, and that'd be another 21 to 22 days of trading, this market would have to go up around 6.5 to 7% for my position to be threatened. I'm not saying that we can't do that, but if we're up 9 out of 11 candles right now with no pause, I have a feeling a pause is coming. I have a feeling maybe a dip or a pullback is coming. Now that we've had this rip to the upside and we took out this previous high, there's two ways that this plays out, in my opinion. Because we took out this high, if this is a low to high swing, we pull back in here to settle. We have to see if this is an accumulation spot for the market to then justify an all-time high. If we don't have a pullback or don't have an accumulation phase, then if we blow this top off, something tells me we're going to have some type of broadening pattern. We're going to come back in and trade in the middle. This is going to get a little bit more complex and more complicated to trade with higher volatility ahead. So just throwing it out there, define risk, take good trades, keep taking profits. And, when you get good profits, take the profit. Capital efficiency is really important. Redeploy it, keep it mechanical, all the good stuff. All right. I'll let you go from there. Thanks for this little weekly update. It's Monday the 19th, and I'll see you back here probably all week. All right. I'll talk to you all soon. Take care. Bye.